In another company.
How about HP?
Love HP.
Why is that?
I don't know. HP is a big company. I think they're underrated. I think they fly under the radar as a big tech company that just doesn't get a lot of credit. I haven't looked at their financials in a while, but this will be a good time to look at it.
So coming from a normal person, Paul, we know we're going to have our 2 p.m. jump here when people get on the show. But go back to that. Go back to the Y charts real quick. Just coming from a normal person, I say to myself, it's $24, so it's affordable.
Whatever that means.
Yes. But it's going
You sound like our Algebra 2 trig teacher who I wanted to throw a
And Paul, guess what? Like
school.
our other people, it's going up. What would ever stop this? It sounds like this is
going up.
Let's go. Why don't we get on the horse here and get after
it? Well, it was also going up here, crash. It's also going up here, fall. So listen, this matters on technicals, but we're looking at fundamentals versus technicals. Let's just worry about the fundamentals right now.
Okay, keep going, Paul.
Okay, so HP, I believe they're based. Oh, aren't they moving to Texas also? Does anybody confirm this? Can I make a plea out there to all the Fortune 500 CEOs watching me right now trying to learn?
Go on.
If you are in California, please move your company to a better state that is more cost effective, that doesn't kill you in taxes, and doesn't take 2 hours round trip, 2 hours each way to get to and from work. Please leave California.
Of course, David Spicer says they are. David, you might as well just be our podcast liaison because he looks that stuff up whenever he looks it up instantaneously.
All right, HP, $31 billion company. We'll call it 3% dividend. That's $900 million a year. Let's call it $1 billion just to be safe because we rounded down here.
What is their PE, Paul?
PE, 12, check mark. Profit margin, X, 4%. Gross profit, really low, 17.5. I'm actually surprised to see this. Why is their gross margin so low and their profit margin? I would have thought higher.
Yeah, this is like
maybe because it's hardware, a lot of hardware in them. Maybe hardware doesn't have a good. Anyhow, so we want to make sure that their free cash flow is well over $1 billion a year to support that dividend.
How about revenue growth? Pillar number 3.
$48 billion to $56.6 billion. Check mark. And as you see, they went up, and then fell. So I don't know if this is because of selling something or not, but look at this. They were $126 billion in 2011. They split something off. I don't remember what it was, but they did split something off in 2014 or 13 or whatever, end of the year, or sell it off or something. The bottom line is you have to understand where this revenue is coming from because it's not very consistent. And for a big company like that, you want to make sure you understand that.
Jared Sauber said Dell is also low margin. Don, is Jared a patron? How does he know?
Is Dell low margin, really?
That's what he's saying. You better be, baby. All right, let's do pillar number 4 is profit growth, Paul.
All right, we have 2.5 billion to 2.8 check mark, but a peak of 5.3 here in the last few years. So it's a check mark, but it's very inconsistent profit.
How about number of shares outstanding?
One thing I want to do though, really quick, I like talking about this operating income.
Oh, Jared's a patron. Okay, great.
4.4 to 3.7. So their operating income is getting lower and lower. That's not a good thing, but okay. Number of shares outstanding.
Yeah, pillar number 5. Sorry about that, Jared. Love you.
1.73 to 1.41. Check mark there.
Nice.
Okay, next one.
We have all check marks except profit margin, Paul.
Really?
Current assets over current liabilities.
Did you speak too soon?
No, I didn't.
20.6.
I'm actually writing them down, surprisingly.
26.22.
What's that? X. Or
current assets over current liabilities. X.
Okay, no good. How about
all right, free cash flow growth.
Free cash flow growth.
All right, kids. 2.8 to 3.8, roughly. Check mark. Then 3.2, 4 billion, and 4. Average?
3.5.
3.5. Not much growth here, guys. I'm going to pick another low multiple. 12.
Why?
It's just low. Their PE is 12. Free cash flow. You're going to get your... Oh, by the way, the great news is their dividends were $1 billion. They have plenty of money to pay that dividend.
That's good stuff, right?
That is a good thing. Plenty. 3.5 times more money. This is good.
Price to free cash flow.
So $40 billion company.
Their market cap
might be a buy, guys. It was at $31 billion.
You're right. Might
be a buy. Trader Mo, add it to our list. We're going to look at the puts today. See if we want to pick up some shares here in the short term, generate some income from that. HP is a big company. You know, so my friend Gary, friends of Mo, I've invested in Gary. He likes going for very, very, very small companies because You're going to get more return from small companies. They're overlooked, not many analysts. I like buying bigger companies with established brands that have a hard time going away. So I like HP as an idea. I want to sit there. I think their printers are good. The question is, how important are printers going to be in the long run? What else do they do? What does HP even do now? See, if I ask that question, that's why I know I have to do more research.
Mason's saying that Sabre printers are much better than HP.
Mason's also a moron, so... Sabre printers? I don't get it.
Paul, how
Is
dare
that The Office?
Yes.
Okay, gotcha. Thanks, Mason. You're funny. I take that back.
Students from Latvia said HP cut their dividend. That's just, oops, forget it. No, that's not correct. Sorry, guys.
They increased it.
I'm crazy. Hold on a second.
I love Mason. Don't get offended, Mason. Don't get your panties in a bunch.
Kurt, this is a great question. And look at this last name. Schwackelstucker? Wow. Paul, if you blindly bought every company that checks all 8 pillars, do you think the portfolio would outperform the S&P? Holy cow.
That's a great, great question, and one that I don't exactly have the answer to yet. And when I get my Morningstar data, I will be able to backtest that, but only 10 years. I don't like only backtesting 10 years, but it is a very good question we've talked about. And the other thing is, remember, I don't think you should just buy based on the 8 pillars. So we should see how it does, but we'll see how it goes from there.
Tony, welcome. He said HPQ is mostly consumer printers, PCs, and laptops. HPE is enterprise, data centers, and software servers.
Okay, what does that mean? Is that the 2 different divisions of the company?
Probably, but still the profit margin at 3%, right, Paul?
5%, not even.
Yeah.
But you know what? They're a very established brand. Who knows? I'm not opposed to this, though.
Inca Warrior
You know what else I like?
Go on, Paul.
The analysts don't like it.
Why is that?
Why is what?
Why do you like that?
Because analysts are stupid. So I'm going to sit there, and they're going to be manipulated by what the stock is doing because they don't want to look stupid. So the stock's going nowhere. They're going to put this thing on a hold thing. 5 recommendations are 5, 1 outperform, 3 underperform, no sell. You're telling me, by the way, try to find me how many sells there are out there. Not many. But I like the fact that everybody's negative on them. That's a good thing.